What's up, guys? It's Ryan Small at Winning with Ryan on social media. Real quick, I wanted to make a short video on how to find my monthly support and resistance levels. So let's hop into it real quick. So first things first, you want to find relevant price. So on the monthly chart, because this is the highest time frame, you need to be careful on looking back too far, because you got to understand, if this was like the 4 hour or the daily chart, and if you were to look back to the left, that would be looking back at pretty much relevant price. So real quick, if I were to go to the daily chart, if price is right here, and if I were to look back to the left, this is still looking back at relevant price. But now when I go to the monthly chart, I can't look back way back here, because now when I do that, is going way back to 2012, and I'm going out of relevant price. So honestly, relevant price would be anywhere from here to here. So real quick, so I can draw. So relevant price would be anywhere from there to here. So from down here in this area is all relevant price. Okay, so now that we got that, you want to identify critical areas that acted as multiple support and multiple resistance, or you want to find, long wicks. And a wick is pretty much something like this, where price was once down here, but it failed to actually close down there. So it's making something like a stop hunt or a fake out move, getting people to sell. And in reality, it's just trying to get you to sell so it can snatch the market up. So you want to look for stuff like that in these key areas. So, and lastly, you want to make sure your support and resistance lines are no more than 1,000 pips apart. So if price right now is at 150, I can't have my next line above 160 or below 140. It needs to be within 1,000 pips. And then once you find your first line, for example, let's say this area right here would be a support. So now that I found the first support, I'm going to move up. And then let's say I found this next one. So the next one needs to be a minimum of 200 pips apart. So just like I have this one's at 143, my next one's at 147. So that's about a little bit over 400, 500 pips apart from each other. So it couldn't be this is at 143 and then I put this one at like 144. Like, it doesn't make sense to do it like that. And when you go down to a smaller time frame, price would just be too cluttered. So you want to have it, with good breathing room. So 143, that one, and then I'm going to put the next one around this area right here, 146, 147. So just like that, now you want to find some resistances. So this first one, it would be around this area. So price rejected here, pulled down. Came through, rejected here, pulled down. Came here, hit it, pulled down. Came through, spiked through, failed to close. Came back, spiked through again, failed to close. Came back one more time, hit it. And then now we might get a breakthrough. So we know off bat that price acted as resistance multiple times in this area. So that would be for sure a key area. So then you just go up to the next area that's similar to that. And that would be probably around this area right here. So when you look, you got a wick here, and then when I go to the left, I got a bearish engulfing that broke through, and then I also got a resistance here. So you look at it. So I need you to understand now, I told you not to look back to the left too far, but once you're looking at relevant price and you're lining it up, you can back test to the left to see if the area that you're trying to put the line acted as a key area in the past. You see what I'm saying? So you can't start from looking back here, but once you find a key area like around here, and then you look to the left and it lines up to other areas in the past that you were critical areas, then that's just more confluence or more confirmation on uh, that's possibly like a good line, I guess, because there's actually like not a good, I mean, not an exact line that you should have it at. You know, some people may have their monthly support at 150 and then 154. I got mine at 152 and 155. So within, you know, these lines, you need to break it down to smaller time frames like the daily and the 4 hour to find smaller critical areas. So just like, for example, if I go to the daily and I look, like you see it has resistance here, 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 after that support here. So if I put a line there, and then you also see, let me change the color because it's a different time frame. You can also see a wick spike through that area right here. So stuff like that. So now you know that if price started down here at 146, it would need to break above 149 in order for it to hit 152. If it pulls to 149 and fails to break it, then it's possibly going to come back down to another area of support. So that's when you go down to the smaller time frames and find that. But as far as the monthly support and resistance, that's pretty much it. I mean, I usually like to only do, you know, 2 or 3 supports or 2 or 3 resistances, because if you have more than like 3 of each, then your charts get a little too cluttered. So you want to have your charts as neat as possible. So yeah, pretty much that's how you find support and resistance on the monthly chart. On my next video, I can break it down into a little bit more detail, and I can also show how to find trend lines and draw supply and demand zones. So if you haven't already, click subscribe to my YouTube channel for more updates on cryptocurrency and Forex. I hope this video helped. I hope everybody has a profitable 2018. Today is December 29th. I think I'll be going to Vegas for the new year, so I'll look to be making a new video probably the 1st of January on my top 5 cryptocurrencies under $1. So I hope to hear from you guys soon. Take care.